Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Stocks in Asia near a correction as the global sell-off deepens, with bonds and gold also tumbling. This all as the Iran war rhetoric ramps up. Less than 24 hours to go until a deadline set by President Trump for Iran to open the Strait of Hormuz. Iran says it will completely close the corridor if it's attacked. Plus, election relief for Friedrich Merz as the German Chancellor's Conservatives win in a socialist stronghold. In France, disappointment for Marine Le Pen's national rally. So let's take a look at those markets then. We have oil holding above $112 a barrel for Brent. New York crude creeping back towards that $100 a barrel mark. It's 7:44 Eastern this evening that deadline has been set for. It remains to be seen if anyone will actually act on that deadline on the Iranian side or on the US side. But as you can see, the oil market is still working off the assumption that the Strait of Hormuz is closed and will remain so. In fact, Goldman Sachs raising its forecast now for the year to an average of $85 a barrel, based on the assumption that we'll see 5% flows for about a total of 6 weeks, with a gradual resumption of flows taking about a month after that. We're settling into our fourth week of war now. The 10-year yield up more than 40 basis points since the beginning to close to 442 right now. If we look at futures, as you can imagine with the Asian sell-off, we are seeing futures pointed lower right here in London, and of course S&P futures also in a few hours time looking for that open to be red. Gold continues to sell off. It's the opposite trade. It is the risk off trade, central banks not buying, people perhaps liquidating. All right, your risk events for today. We have Ursula von der Leyen in Australia. At 3 p.m. UK time, we get Euro area consumer confidence data and a really interesting week for the Sarah Week conference to begin. Stocks in Asia are heading towards a correction with the Iran war in its fourth week now. Let's get more from Winnie Su in Hong Kong. Winnie.
Yeah, morning, Bonnie. As you mentioned, we are seeing pretty much a risk-off day in Asia today across assets ahead of that 48-hour deadline by President Donald Trump. And now we're just less than 24 hours away, so expecting that to come tomorrow morning in the Asia session. Now, looking across the board, MXAP here down more than 3.5%. As you mentioned, we are headed for a technical correction level, but also a similar level. We are looking at the Topics Index here down about 3%, and that is coming after Japan had its holiday on Friday. So a bit of a catch down there as well. We are just about 1% away from erasing all year-to-date gains for the Asian stocks, and that's a similar level that we're looking at for gold as well. Now flip the board and take a look at how that stronger US dollar is pressuring FX in Asia today. Specifically, you're looking at Japanese yen still hovering just below that 160 level against the dollar, and that is also coming after that global bond sell-off, as well as the bond sell-off we're seeing in Japan, with the 10-year yield here up 3 basis points, hovering around that highest level since the 1999. And when it comes to Korean won, weakening about 0.5% at its weakest level since 2009, even though we did have that nomination of a new governor for the Bank of Korea, who is seen to be on the hawkish side. Now, overall, it is weakness across the board. The yuan here also dipping a little bit after the weaker fixing from the PBOC. Back to you, Bonnie.
All right, Winnie, thank you so much. Winnie Su there in Hong Kong. The US and Iran are trading threats as the conflict enters its fourth week now, showing no signs of de-escalating. US President Donald Trump issued Iran a 2-day deadline on Saturday to reopen the Strait of Hormuz or face its power plants being bombed. Treasury Secretary Scott Bessent told NBC Hormuz is in its sights, with the US aiming to destroy Iran's fortifications along the strait.
Every day, we are taking out their missiles, their missile systems, and the factories that build those missiles. And now the General Kane, Secretary Hegseth are leading a campaign to destroy all the fortifications along the Straits of Hormuz. Again, they're not mutually exclusive. Sometimes you have to escalate to de-escalate.
Meanwhile, Iran fired back with a threat of its own.
If US threats regarding Iran's power plants are carried out, the following punitive measures will be implemented immediately. The Strait of Hormuz will be completely closed and will remain closed until our damaged power plants are restored. All power plants, as well as the energy and information and communications technology infrastructure of the Zionist regime, will be extensively targeted. All similar companies in the region that have American shareholders will be completely destroyed.
Let's bring in Bloomberg Horizons anchor Jumana Bercecci. Jumana, both sides upping the ante clearly. Where do we see the situation headed when that Trump-imposed deadline arrives at 7:44 p.m. Eastern?
Correct, Bonnie. And we just heard there from the U.S. Treasury Secretary Scott Bessent, who's saying that sometimes it's necessary to escalate in order to de-escalate. And what has happened over the course of the weekend is another shift in messaging coming through from the White House and indeed from President Trump himself. Late Friday evening, he suggested that they were thinking about winding down their military operations in Iran. And that was followed up by a Truth Social post on Saturday evening, posted at exactly 7:44 p.m. Eastern Time. The reason that we give the exact time is because ultimately he gave Iran a 48-hour window to reopen the Strait without threat, or else, he says, the United States of America will hit and obliterate their various power plants, starting with the biggest one first. And so that 48-hour window ends this evening, which translates to about 3 or 4 in the morning, in the middle of the night over here. But Iran has responded as well, and they say that if the U.S. follows through on those threats to strike at power plants, they in turn will target all energy, information technology, and desalination infrastructure linked to the U.S. and Israel in the region, once more vowing to retaliate on assets in the region. And I will say that furthermore, overnight, we've had more comments from the Speaker of the House, the Speaker of the Parliament in Iran, and he's also suggested that any financial institution that is linked to buying U.S. Treasury bonds could also be a potential target in the region as well. So they've expanded the scope of where they could retaliate should the U.S. go down the route of hitting civil infrastructure. At the same time, President Trump has also, according to our reporting, is weighing the possibility of a takeover of Karg Island. That is a key, of course, lifeline and oil export island for Iran. And we have reported that there are 2 Marine divisions making their way over to the region as well. That constitutes over 2,000, 3,000 ground troops that will be heading towards the region, which really just suggests that this war is not de-intensifying anytime soon. And actually what we're looking at is potential more weeks of this, given how long it's going to take for those new reinforcements to arrive to the region.
Yeah, and of course, strikes continue. So Iranian missiles hit Israel near its main nuclear center as the IDF expanded strikes on Tehran and on Lebanon. What can you tell us for context?
That's it. So exactly on Saturday afternoons, Iran launched a very heavy wave of airstrikes at 2 cities closely situated to Israel's nuclear facilities. And the result, according to the Israeli Health Ministry, was more than 160 people were injured in these strikes at these 2 towns, Dimona and Arad. And in retaliation to that, the Prime Minister Netanyahu vowed utter revenge. And so they have put together a series of very heavy bombardments of Tehran overnight. The airstrikes are continuing, also hitting what they call regime infrastructure. And at the same time, the IDF have expanded their operations in Lebanon, in southern Lebanon. Yesterday, throughout the course of the day, a major bridge separating 2 big cities on the southern coast of Lebanon was blown up. And the IDF have said that they have done that in order to stop the movement of Hezbollah arms from the northern part of the Litani, which is the key river separating those main cities, to the southern part of the country. They also said that they're going to continue to demolish homes on the southern part of the border and to ensure that Hezbollah don't come near. But the view there is that Hezbollah may be preparing IDF may be preparing itself for a full ground invasion of Lebanon. And indeed, that is a reflection of some of the comments that the Lebanese president gave yesterday when he said the fact that the IDF have been targeting, moving so many people and so many residents from the southern part of Lebanon is perhaps a prelude to a broader ground invasion in the south. And he's calling on the diplomatic community to get involved.
All right, Jumana, thank you so much. That is Bloomberg's Jumana Bersachi in Dubai. Oil prices near mid-2022 highs as investors weigh President Trump's ultimatum to Iran to reopen the Strait of Hormuz. The closure is causing ripples beyond the region, evolving into a global fuel crunch. The International Energy Agency's executive director, Fatih Birol, weighing in on the impact of the war.
Only as of today, we lost 11 million barrels per day. So more than 2 major oil shocks put together. Plus, after the Russia's invasion of Ukraine, the gas markets, especially in Europe, we lost about 75 billion cubic meters, 75 BCM. And as of now, as a result of this crisis, we lost about 140 BCM, almost twice.
I'm joined now by our energy reporter, Anthony De Paula. Anthony, we don't know what Iran will do, but it seems highly unlikely that Iran will agree to Trump's terms. What then happens to oil prices? Can they go higher?
Hi, Vonnie. Yeah, sure, they can go higher. I mean, we're seeing oil prices at some of the highest levels that we've seen during this crisis. But we're not pricing in yet the complete destruction of energy assets in the Gulf, which is what the two sides are threatening now. So some of that price action is showing some additional risk in the price, but it is being a little bit held back by some of those comments about Trump wanting to look for a solution, wanting to even wind down operations. But, you know, it's really around the Strait of Hormuz, the fact that that is still blocked, the fact that oil is not going out of the strait. And that's really putting the focus on Saudi Arabia, which is the country that's got the biggest workaround pipeline for the Strait of Hormuz. They're running the East-West pipeline, which runs from their oil fields in the east, usually exporting through the Persian Gulf. Now they're exporting through the Red Sea. That pipeline is something that the Saudis have been building up over the last 4.5 decades. They started it to supply refineries, export-oriented refineries on the Red Sea over the last decade as tensions with Iran mounted and as they were concerned about the Obama administration's moves towards the nuclear agreement with Iran. They decided to build that pipeline capacity up and expand that. Now that is really coming into its own with this crisis, because as nothing gets out of the Strait of Hormuz, the Saudis are able to pump about 7 million barrels a day across country, 2 million barrels a day going to local refineries, and about 5 million is able to get to markets. So that, along with some of the releases that we've seen from IEA countries, from the United States, these interesting moves by the United States to de-sanction Russian and Iranian crude on the water, these kind of efforts are holding that price back a little bit, giving the markets a little bit more certainty that there is at least some supply. Of course, it's not making up for the roughly 15 million barrels a day that we're not getting through the Strait of Hormuz out of the Persian Gulf, but those factors are helping put a little bit of a Band-Aid, let's say, on the market. But it's really that past investment, that foresight by the Saudis, looking at this geostrategic situation in their region and deciding to build that pipeline to the west and expand its capacity has really given them an outlet that is helping the markets at this time, Vonnie.
Yeah, and just as you were speaking, Brent crude going through 113 a barrel again, though. Anthony De Paula, thank you so much. Markets definitely risk off today as the sell-off in stocks, gold and bonds deepen. Let's bring in Mark Cudmore, Bloomberg's executive editor for Markets Live. Mark, Ed Al-Husseini of Columbia Threadneedle saying it's basically pandemonium out there. It's sell first and ask questions later. Do we see that continuing today, and will it eventually hit stocks? It really hasn't done so, I think, until now.
It's not hit US stocks too much, but we are having the worst month for global stocks in 3.5 years by some margin. So we are having an extremely bad month for stocks. But US stocks have been relatively more resilient. That said, US equity futures are trading at 6-month lows, or I think it's 6 or 7-month lows, in fact. So I don't think we're being completely impervious there. Does it continue? Yeah, I think stocks ultimately have more downside. We still have quite a bit of complacent positioning out there, because people are continuing to hold on to the optimistic idea that Trump has an incentive to find a solution very quickly, because in the midterms he can't afford this conflict to continue. But it's precisely because he can't afford this conflict to continue that Iran doesn't seem to have as much of an incentive for an off-ramp. And that's why I have no idea how the conflict transpires. But I do know that the market is positioned very optimistically and waking up to the idea that maybe they're a little bit over-optimistic. So I think that stocks in the short term seem to be reaching a little bit of a panic. So you'd maybe think that over the next 24 hours we get a little bit of relief bounce at some point. But I expect that to be a deceased feline variety of bounce, and that ultimately stocks have more downside in the weeks ahead.
Yields, the 10-year US Treasury yield at 441.75. Obviously, markets are pricing in some interest rate increases. Could that turn around very quickly were there to be a de-escalation, Mark?
It could, but I also, I think the more rapid turnaround might be if we start trading the negative growth impact from the conflict, if it continues. I think if we get de-escalation, it won't turn around. We'll get a violent sudden move, but whether it persists in a follow-through rebound will depend on whether we have visibility on the strait being sustainably open. It's not clear that immediate de-escalation gives us that confidence to get traffic flowing freely in a very rapid time span. So I think there'll remain a lack of visibility, which is why, of course, we'll move rapidly on any headline, but it's whether the follow-through comes. What might be interesting in the bond market is so far we've been trading the inflationary impact on the energy side, but the longer this continues, it turns into more of the negative growth impact of the combined stagflationary impulse, and that might see yields come off a bit. So actually, I think bonds is the market that's probably overreacted, while stocks are finally catching up a bit more today. Precious metals are doing what they should in tanking. I think FX has probably been the quietest market and probably where we need a bit more movement.
Yeah, all right. Well, the dollar a little bit stronger once again today. Mark, thank you so much. Mark Cudmore, Bloomberg's executive editor for Markets Live. Still ahead, how businesses are navigating rising energy and freight costs. I'll be speaking with the CEO of Germany's second largest steel maker. But first, what state election results in Germany mean for Chancellor Friedrich Merz? That story next. This is Bloomberg. German Conservatives, led by Chancellor Friedrich Merz, have secured an election win in a socialist haven as he struggles to gain traction among voters. Meanwhile, in France, the far right fell short of taking control of some major cities during yesterday's municipal elections. Let's bring in Oliver Crook, Bloomberg's chief Europe correspondent, to take us through some of the results. So, Ollie, first in Germany, the victory softening the blow really for the CDU after that stinging defeat in a neighbouring state. Tell us more.
That's right. A couple of weeks ago, when we went to the polls in Baden-Württemberg, this is one of the biggest states within Germany, we saw the CDU, despite leading the polls, sort of lose out to the Greens. And you've seen here now in Rheinland-Pfalz, this is a smaller state within Germany, only has about 4 million people. The CDU and Friedrich Merz's party did manage to win and edge out basically the Socialists that had held a seat for about 35 years. So it's a little bit of wind in the sail for this Chancellor of Germany, who we have to say from the very outset had difficulty getting himself voted in to the chancellorship by even his own party in what was supposed to be a procedural vote. He's not a terribly popular politician. Of course, the difficulties of the German economy have been piling up for the last few years. So this does give him a little bit of momentum. That being said, the party that he managed to defeat is, of course, also part of the government, the SPD. It is a junior coalition partner. It is a party that has lost a huge amount of support across Germany since the premiership of Olaf Scholz. And we should say that the AfD, which has never really had a significant showing in Rheinland-Pfalz has got its sort of record in this vote, notching about 20% of the vote. So going forward into this year, we should say there are about 5 state elections within Germany that Chancellor Merz is going to try to gain a little bit of momentum in. What we're really going to be focusing on very concretely is in September when we go to the East German states. These are the states, Vani, where you might not only have the AfD win, you might have them get an outright majority, and that'll, of course, be significant as we consider the future politically for Germany, unless, obviously, Chancellor Merz is able to sort of cut through politically and, of course, to get his economic reforms through to turn the economy around.
Now, Ollie, if we move over to France, Marine Le Pen's national rally missed out on some of their biggest targets. So curious, what does this mean ahead of next year's presidential election?
Yeah, so watching the French election, we're watching very closely, of course, some of the municipalities. Of course, Paris is the most significant. It's about 1/10 of the French economy. We know this is a very sort of centralized sort of nation where a lot happens within Paris. And the Socialists managed to win in Paris yet again. So the Socialist, Emmanuel Grégoire, will replace Anne Hidalgo, which was mayor of Paris since 2014. So the Socialists really staying in power over in Paris. What we saw more nationally was, again, a move to the right to a certain degree. That being said, the Rassemblement National, Marine Le Pen's party that is headed by Jordan Bardella, they did not manage to win all of the cities and municipalities that they had anticipated they would have liked to have won in this second round of voting. Though we did see a tilt to the right, it's sort of an interesting omen going into the next year when we have the election within France. And we should say, again, it's a very open election within France. Sort of Emmanuel Macron's big sort of project politically was collapsing the center of French politics with the Républicains on the right and the Socialists on the left. Everybody floated towards Macron. So afterwards, once he's leaving office because he cannot run again, you have a very, very open field. And that is a field that the far right is hoping to exploit. It is one that they are sort of very well organized in. But looking at these municipal elections, they did not manage to cut through quite as powerfully as they would have liked to.
All right, Ollie, thank you so much for that update. Oliver Crook there, Bloomberg's chief Europe correspondent. Slovenian Prime Minister Robert Golob has claimed a slim victory over nationalist opponent Janez Janša in the country's closest election in history. Janša said he was ready to challenge the result, citing his own party's data that put him ahead. The tight outcome sets the stage now for lengthy coalition negotiations. Later in the programme, how the war has stoked inflation fears. We'll get the view from Jefferies economist Modupe Adegembo. This is Bloomberg. To some other top stories we are following this morning. European Commission President Ursula von der Leyen is visiting Australia this week after she said a trade deal between the two sides is, quote, in the final stretch. Von der Leyen will travel to Canberra to meet with Prime Minister Anthony Albanese, although it hasn't been confirmed if a deal will actually be signed. Australia and the EU have been negotiating over a free trade agreement for more than 8 years now. Meanwhile, UK Prime Minister Keir Starmer is to hold an emergency meeting with his top ministers and Bank of England Governor Andrew Bailey on the Iran war. Starmer will discuss the economic impact of the crisis with cabinet ministers, including Chancellor Rachel Reeves. Energy security, supply chain resilience and the international response to the war will be on the agenda. Let's take a look at these markets then, because we're seeing gold and oil continue their moves of last week, with oil rising another 1% in the early hours of the morning, above $113 a barrel now for Brent crude, with Goldman saying, look, in our base case scenario, our current new base case scenario, it's going to take 6 weeks where we'll see 5% of flows through the Strait of Hormuz and then a gradual month of reopening after that. And in that case scenario, Brent is going to average $85 a barrel for the whole of 2026. You can see gold selling off once again. We're back down to under $4,300 an ounce. And Euro stocks futures are pointed extra lower today as we see a sell-off right across Asia, with some indices down about 6% intraday. I do want to flag, too, the 2 India-flagged ships carrying LPG, liquefied petroleum gas, are in transit through the Strait of Hormuz. So some ships definitely getting through, but it depends on what country your call sign is from. Coming up, how the war has stoked inflation fears. We're going to discuss all of that next. This is Bloomberg. London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Stocks in Asia near a correction now as the global sell-off deepens, with bonds and gold also tumbling as the Iran war rhetoric ramps up. Fewer than 24 hours to go until a deadline set by President Trump for Iran to open the Strait of Hormuz. Iran says it will completely close the corridor if it's attacked. Plus, election relief for Friedrich Merz as the German Chancellor's Conservatives win in a socialist stronghold. In France, though, disappointment for Marine Le Pen's national rally. All eyes on oil today, with Brent crude now trading just below 113 again. We are seeing, though, those continued gains as Goldman ups its forecast once again, saying it's going to be 6 weeks of just about a 5% flow through the Strait of Hormuz, followed by 1 month of gradual reopening. That's their current base case, with a price target then for an average of $85 for the entire year on Brent crude, and that could go higher if things get worse. New York crude very perilously close to that $100 a barrel, so gaining today, but there is still that $13 spread roughly. And the 10-year yield, as you can see in the U.S., trading at 441.55. Increase of more than 40 basis points, really, just over the last few days. Let's take a look at futures, because, as you might imagine, they are pointed lower today with a big sell-off, particularly across Asia. Euro Stoxx futures pointing to a decline at the open of more than 1.5%. S&P futures are at their lows of the session now as we inch ever towards that U.S. open, and gold is firmly below $4,300. Bitcoin as well sold off at the weekend. This escalating rhetoric and this deadline, I mean, it remains to be seen if anyone acts on the 7:44 p.m. Eastern deadline, but that's the time we'll all be watching. Time now, though, for your front page news. The Financial Times leads on stocks tumbling as U.S. President Donald Trump and Iran trade threats. Explosions rock Tehran as Israel's military says it has launched a wave of extensive strikes targeting infrastructure. Meanwhile, the Wall Street Journal reports on their investigation into airstrikes damaging complexes used to hold political detainees. The headline reads, "The Iranian prisons where bombs are threatening dissidents and Americans." Finally, Les Echos leads on the French municipal election results. The headline leads, "Emmanuel Grégoire keeps Paris on the left, a resounding defeat for Rachida Dati." And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, Terminal subscribers can go to Day B Go. Israel's military says it has begun a wide-scale wave of strikes targeting Iranian regime infrastructure in Tehran. This all coming as Iran's strikes on Israel appear to be intensifying as the war in the Middle East stretches into its 4th week now, with no sign of easing. Bloomberg's Dan Williams joins us from Jerusalem. Dan, what is the latest on the strikes, particularly in Jerusalem, where we've heard that perhaps religious sites had been targeted?
Good morning. Yes, indeed, the public commentary has been ebullient, almost triumphalist, especially when it comes to the Israeli defense minister, as you noted, vowing stepped-up strikes on this, the 4th week of the war. Nonetheless, perhaps more quietly, officials are noting that the Iranians have managed, despite a drop-off in missile strikes overall during the 3rd week of the war, to pick them up over the weekend, specifically with 2 missile attacks, 2 missiles that managed to reach their targets. Towns in the south of Israel where more than 100 people, civilians, were wounded over the weekend. Now, Israeli authorities are calling this a lucky strike for the Iranians, very unlucky for the Israelis. They're saying a grand total of 4 missiles only have managed to hit home during this war, missiles fired by Iran at Israel. Nonetheless, that has jarred the public here. And given the threats by Iran to retaliate, should President Trump carry through on his threat to attack Iran's energy assets, the Iranians have said they would do likewise throughout the region, including in Israel. It would appear the Israelis are taking precautions, announcing just overnight or early this morning that at Ben Gurion Airport, Israel's main gateway to the world, where they'd gradually started reintroducing flights some days into the war, they're now reducing that activity once more to 1 flight an hour and no more than 50 passengers on each outgoing flight. So the Israelis, despite their outward confidence, are still registering some concern that there could be surprises in the works, especially and including in the coming hours and days.
Well, Dan, the IDF says it is preparing to expand the targeted ground operations in Lebanon. What do we know about that statement?
This is the second front for Israel of this war, battling against Hezbollah, an Iranian-backed militia in Lebanon, a militia that's proven very dogged and capable during this round of fighting, perhaps dashing Israeli predictions or hopes that it had been defanged by the previous round of fighting in 2023, 2024. The Israelis are slowly moving ground troops in, slowly but steadily, announcing that up to the Litani River, that's the natural demarcation that really marks out some 10% of southern Lebanon, the former fiefdom of Hezbollah in that country. They're now saying they will turn this into a de facto buffer zone. Some 1 million Lebanese civilians have been displaced. At the same time, up to 1/3 of the Israeli population has found itself under Hezbollah rocket fire over the past 2 weeks. So it would appear that as long as those two sides are locked into this conflict, more destabilization is in the works as the Israelis move further and further inland in the hope of stemming those rocket attacks in parallel to their war jointly with the United States against Iran.
All right, Dan, thank you so much. That is Bloomberg's Dan Williams there in Jerusalem. For a closer look now at the market impact from the war in Iran, I'm joined by Modupe Adegbembo, an economist at Jefferies. Thank you so much for joining. Talk to us about the euro area economy, because obviously we've had a huge run up in yields, across the world, really. Can the euro area economy withstand these inflationary impacts better than other areas, for example?
I definitely think we've seen a lot of changes in markets, of course, as the energy impact is kind of running through markets. But the challenge, I think, for the Eurozone economies are that they are at a fragile point. They're already facing some of the risks from Trump tariffs. That feels like a long time ago, but it is something that is still impacting European manufacturers. And when you think about the potential for energy prices to increase significantly, I think it does really put the risk of recession back on the cards. And I think that's something that we're not necessarily seeing at the moment, particularly in rate markets. I think rate markets have been very quick to price in the inflationary risks, and it does make sense. They are leaning against those potential risks, but you also have to think about the growth impacts, and that's another thing that I think will definitely come if this kind of energy price shock is sustained.
What could the European Central Bank do to stave off a recession if indeed it thinks it's coming?
I think it's interesting because I think the European Central Bank is in a different position to where it was in 2022. In 2022, interest rates were essentially at rock bottom. So now interest rates are neutral. So they have a little bit of buffer, and I think they kind of have some space to wait until they act. And I think that's positive, especially when you think about the negative growth impacts. But actually what the European Central Bank can do, I think, is kind of limited actually here. I think a lot of the power is potentially in the hands of governments, because a lot of the focus will be about what are the governments going to do to protect consumers, to protect businesses from this increase in energy prices. And central banks only have so much that they can do in terms of the interest rate policy. So I think their hands are tied in some senses, but they will be very much, I think, focused on ensuring that inflation expectations remain reined in. I think that's where they'll really try to focus.
Traditional economics would have it that you don't hike into, an energy shock, right? But will there be no other choice here?
So I don't know if we're there yet, but I do think that perhaps the bar to them doing something like this has definitely lowered. We've seen the energy shock of kind of 2022 and a situation where potentially central banks are a bit slow to act. And you can already see from last week's central bank meetings that they are already ready. They're saying we stand prepared to hike. We're in a position where we will do what is necessary. So I completely agree with you. I think traditional economic theory says that actually central banks should probably hold off here. But I wouldn't be surprised if they do decide to kind of hike into this energy price shock.
Who'll go first? I mean, Andrew Bailey was so hawkish last week, right? I mean, I didn't destabilise the market, but it for sure took the market off guard.
Yeah, absolutely. Markets were not expecting, I think, the Bank of England to be as hawkish as that. And I think from the starting point that actually when you look at the Bank of England in the UK, rates are already restrictive. They're close to 4%. So I think people may be expecting it more from the ECB than they were from the Bank of England. But the way I see it is that the Bank of England is also facing this uncertainty around whether we have persistent inflationary pressures in the UK versus the Eurozone. But I do think if a central bank were to hike, I think it would be the ECB first, just because rates are neutral in the Eurozone. And so there may be more reason for them to lean against those inflationary pressures, but I don't think we're there yet.
The European economies have been told that stockpiles need to increase, right? So they're low at the moment. They're not where they should be, and they're not where they need to be if we continue to see this going into the summer. Are there economies that can withstand this better than others? I'm talking some of the countries that maybe might need so much oil. And is the UK, for example, much more dependent on where the gas price goes as opposed to the oil price?
Yeah, so I think gas is absolutely driving the outlook for the UK. Its importance in electricity generation just means that, you know, the gas price essentially dominates what we are paying for household bills and business kind of energy bills in the UK. When I look at the euro area, it's quite different because a lot of countries are very reliant on oil and gas. You can think about countries like Germany, which are very reliant, Italy, Belgium. Italy and Belgium in particular have quite a lot of exposure to Qatari gas. And so directly they're having an impact. They are being impacted by some of the disruptions we're seeing. But then you can also think about countries like France, who have a lot more kind of nuclear capabilities. And therefore, even though they are absolutely impacted by the price of electricity and gas on international markets, it may not have as big an impact on inflation. So I think some countries are slightly more insulated. I would say the UK is one of the ones that is most exposed. And that is also one of the worries. And I think why people like Andrew Bailey definitely want to make sure that they are seen, that people know that they are willing to act if necessary.
Mudube, have you given much thought to the scenario where, say, President Trump decides he has enough of this, he pulls out or he declares victory or he gets out in some way, but the conflict continues regionally? What happens in that case? Because at that point, the Strait of Hormuz is again up for question, right? I mean, it's primarily being used at the moment by the Iranians as a sort of a revenge on the United States. Would it remain closed, and what would happen?
Yeah, no, I think that's really, really interesting. And I think the way that I'm seeing things, or if we were to enter into a situation like that, I think markets would really, really focus on energy. How much is getting through the Strait of Hormuz, and what impact is that having on wider energy markets? Because in the end, that's how the economic impact is particularly being transmitted to other countries, especially when we're looking at Europe. And so I think a situation where Iran are allowing some tankers to transit through the Strait of Hormuz may allow oil prices and energy prices to come off. And that could be a situation where, even though the conflict still continues, it may not have such a kind of headline impact on energy markets. And that's something that we could see. But I also think there is a chance that, you know, if we see a de-escalation or a potential de-escalation, we may not see energy prices come off. And I think that's the fears that the central banks really have, that this energy price disruption continues throughout the whole year. And that is a real uncertainty.
All right. Thank you so much for joining us, Mudube Agabembo, economist at Jefferies. Just want to bring you this breaking line now. Korean retail traders have bought a record 7 trillion won of Kospi stocks just today in today's session. Once again, retail traders in Korea buying a record 7 trillion won of Kospi stocks in today's session. Quite the figure there. Coming up, the German steelmaker Salzgitter reports earnings as it assesses the impact of the Iran war. We'll be joined by the CEO next. This is Bloomberg. Just want to bring you some Salzgitter earnings. The steelmaker just out now in the last few minutes with earnings. The dividend per share slightly shy of the estimate, but coming in at 0.2 euros per share. Full year sales of 9 billion euros. That was just again slightly shy of the estimate for 9.09. Still seeing full year sales at about 9.5 billion euros. And then in total, the full year pre-tax loss coming in at 27.7 million euros. Delighted to say now the Salzgitter CEO Gunnar Groebler joins us now. Thank you so much, Gunnar, for joining us. Talk to us first about the impact the Iran conflict is having on your steelmaking and your entire business.
Well, of course, the Iran conflict is unfortunate, both from a human perspective, but also from a business perspective, because it gives uncertainty into sort of our customers' industries, be it the car manufacturers, infrastructure, and others. So that, of course, undermines the slight positive trend that we have seen beginning of this year. But we have to see how this now unfolds and how long this will drag on. From a Salzgitter perspective, we're pretty well hedged bullish when it comes to energy, especially gas. We're not dependent on oil. It underlines again our strategic move away from fossil fuels. This transformation towards a green steel effort proves to be wrong also from that perspective. So there are impacts, yes, but more from the customer side than for us operationally.
What's your base case for when you might need to raise prices? We've heard from, the BASF chemical CEO, for example, saying we're looking at maybe 2 months down the road. But what is your base case?
Well, given that sort of the impact on us as an industry is limited to I would say, to gas, we certainly have to see how that unfolds. However, especially on the logistical side, bunker oil, diesel, etc., there we see impacts. So inbound logistics for us and outbound logistics to the customers will have a price. We'll see a price increase, and that's certainly something we need to discuss with our customers. And we are already in talks with customers on this issue. So that's, I would say, the major impact that we're seeing right now. However, as said, as the Iran war might drag on, there will certainly be other effects as well that we need to take into account.
When you say you're in talks with customers, are you flagging that you might potentially need to change contracts?
Well, certainly we need to discuss sort of how this price increase on the logistical side will be sort of transferred or split between the customers and us. So that's the whole point of the discussion right now, given that the sharp increase in fuel cost, both for vessels overseas, but also trucks and trains.
Gunnar, a very difficult time. Are you also considering cost cuts, maybe adjusting production or taking other measures to protect margins on your internal end?
Yeah, absolutely. So what we have done already in 2025, we have focused very much on the resilience of the company. We have reduced costs. We have performed our performance program, Performance 2028. We have taken out roughly 130 million in cost in 2025 alone, and we'll continue that program forward. We will focus on infrastructure because given sort of all the infrastructure packages that we have seen in Europe, especially in Germany, there will be demand on the infrastructure side. And we also focus on defense. We have broadened our offerings on the defense side, so also see some growth opportunities here. Limited, though, in terms of volume, but certainly worth it. So that's why we have not only looked at cost reduction, but also in shifts in production to be able to move towards higher margin products.
Gunnar, one of the knock-on effects, of course, is that markets started pricing in rate hikes and an incredible 3 from the ECB currently this year. What are you anticipating in terms of a knock-on effect on sectors like construction, for example, and might you move away from construction more towards defence should this continue for longer?
Well, certainly we have to see how this affects especially construction. So we have seen sort of the bottom out of the low market in construction in Q4 last year. We have seen a slight pickup. So far, we haven't seen the market changing due to those developments, but certainly something we have to watch out closely for. However, given the infrastructure packages that especially Germany has put forward, that will come into effect, in my view, visible for us in the second half of 26, and then further in 2027, we see still a good market for construction starting this year and then going forward. But certainly we have to see sort of how this whole situation unfolds. Pretty early in the process to have a final view on that right now. It will have an impact, though. Yes.
Gunnar, are you seeing any adjustments from customers, particularly automotive customers, already, or is everybody waiting to see how long this lasts?
I think that's the latter. We're still sort of in this trying to understand mode. So what does it do? How does it impact? And again, the closure of the Strait of Hormuz would predominantly affect oil and gas, so the energy side of things, and how that then unfolds for our customers' industries. We need to see. Some of the industries are not that much dependent on the energy prices, so there the impact might be limited. On the automotive side, certainly certainly something we have to monitor, because their customers will certainly then have a specific view on that. But that might also then help with the shift towards electric vehicles. That's then sort of the natural hedge, if you want to say so, to this war.
Well, Gunnar, thank you so much for joining us today, and congratulations on the quarter. Gunnar Groebler is CEO of Salzgitter. Now to some other stories we're following. You're looking at live pictures now from New York's LaGuardia Airport. That's where an Air Canada Express flight collided with an airport ground vehicle shortly after landing yesterday. It's the latest in a series of incidents that have put aviation safety in the spotlight. NBC reports that 80 people were on board and at least 4 have been injured. LaGuardia Airport has been closed to incoming flights. EasyJet is being demoted from the FTSE 100 after a sustained drop in its share price. The budget airline fell to its lowest since November of 2023 last week. It was already under pressure before the Iran war from price competitions. Hikma Pharmaceuticals is also dropping out, making way for Lion Finance and IG Group. Plenty more coming up. This is Bloomberg.
Energy prices are likely to stay high for the foreseeable future, putting some inflation pressure and also some pressure on the delivery chain or on the supply chain. And in that sense, the situation is a little bit unstable.
Sergio Armati there, the UBS Group CEO, speaking exclusively to Bloomberg. Let's have a look at these terminals, because in this one you can see the path policy projections for the Federal Reserve and the unwind, the incredible unwind just since the end of February, which is the blue line, right? And this is where we are today at the yellow line. So that's all of those cuts coming out and potentially some hikes being priced in. Let's take a look at LNG now, because basically exports have stopped. It's really incredible. If you look at UAE and Qatar, their LNG exports are literally at zero at the moment, and that's contributing to a 6-month low for LNG exports entirely. And then with gold and volatility, we might be seeing equity volatility coming up to meet gold volatility. But right now, gold volatility is still outpacing equity volatility by quite the margin. Coming up, Sheryl Sandberg, the former Meta COO. She's going to be on Bloomberg ETF IQ. That's at 4 p.m. London time. Don't miss that interview. Do stay with us, though. The opening trade is up next. This is Bloomberg.